Thank you for joining the American College Center for Women. Our webcast today is Overcoming Financial Planning Challenges Facing Modern Women, and we have a really exciting panel of experts today. I am so excited for this webcast. Our practice session was so much fun. We had so much to talk about. You'll receive tons of practical tips and strategies to use as you meet the needs of your female clients. So let's get started. I'm your moderator today. I am the Executive Director for the Women's Center at the American College of Financial Services. And as I mentioned, I have three really expert panelists today that I'm really excited to present to you. In lieu of formal intros, we would like each of our panelists to introduce themselves, talk about why they have a focus on women, and share a story, one of their clients' stories. So Corey, I'm going to start with you. We're going alphabetically. If you wouldn't mind introducing yourself.
All right. Aloha, everyone. I'm Corey, and I'm the CEO and Director of Joy for Empowering Finance, my own firm that I launched earlier this year. And why I focus on women, I don't have a client story, but I actually have a story with the light bulb moment of why I went into financial planning. And so in my early 20s, I started attending all these different financial seminars that were focused on women and educating women in finances. And there was an older woman in the audience that stood up and asked a question in front of everybody. And you could tell she was pretty distraught and was not in a good place. And her question was that her and her husband were divorcing after being married for about 25 years, and they had owned a business together. And during the entire 25 years, he had claimed all the income under his Social Security record. And now they were getting divorced, and she had no Social Security record. And she was asking the panelists, what could she do? And could they redo everything now that she was getting divorced and going out on her own? And unfortunately, there wasn't anything that could be done at that point. So it was a light bulb moment for me when I saw, if she had had a financial planner that had helped her along her journey, or had spoken to her, or had, been at her side, it really, really, really would have helped support her for her financial freedom and financial success in her later years in life. So for me, that was my light bulb moment of why I went into and really wanted to focus working on women in the financial industry.
That's a great story, Corey. Thanks for sharing. Andrew, if you wouldn't mind telling us why you have focused on women and perhaps share a story.
Absolutely. Good afternoon. So I'm Andrew TUDOR. I'm out of Cincinnati, Ohio, and I run a financial planning firm at RIA, actually co-founded with my older brother, Fred, called Alchemist Wealth. And I've spent 10 years in the overall finance industry, 5 years doing financial planning. And when we decided to come together from different pieces of the business to form our own entity, we really had to think about who we enjoyed working with. And I looked at my book of business, and I had about 65–70% of those folks were female. And it was really an aha moment, like Corey shared. But for me, in my previous role with a larger insurance-backed agency, I had advisors that I would bring in under me and work with. And a lot of those folks, about half of the folks I recruited in were women. And I would do meetings with them, with their clients or their prospects and the advisor. And some of the stories that I started to hear about how affluent, high earning, very savvy women felt in meetings, being overlooked or talked over, whether they were single or with their significant other, really made me rethink how I spoke to women and how I focused in meetings. And then really wanted to make it our focus when we launched our firm to really educate, coach, and really steward women towards financial freedom. So that's why women.
Well, that's a great realization. Thank you, Andrew. And Sherry, I'm going to ask you to do the same, please.
Hi, I am Sherry FINKEL Murphy. I'm a private wealth advisor with the Atrium Financial Group, part of the private client group with Northwestern Mutual. And my financial planning practice is a second career for me, an entire second career. And when I began, I knew immediately that my ideal client was me at 25, or me at 35, or me at 45. High cash flow, not yet high net worth, trying to achieve something and looking for mentorship. At its simplest level, I wanted to be the person I didn't have over my shoulder when I was their age, and I am. I do a lot of life and career coaching wrapped in financial planning. And it's powerful when women can recognize and empathize with one another. I am very candid with clients about my own life experiences, especially around divorce and repartnering and dealing with declining parents, because it's a universal challenge for us at some point in our lives. I realize they do want to know what I do with my financial plan, and I'm candid about that as well. But women are so much more about the planning than just the finance. So there's joy for me in giving a woman permission to live life on her own terms. And I have a client story, a woman who came to me after she was divorced, and she kept the house in the divorce. It was a beautiful old home. When we first met via Zoom, I commented on how pretty the room she was sitting in was. It was painted periwinkle blue, so it was just striking. I asked if she liked her house, and she said, "Oh, I love my house." And I asked if she liked being a homeowner, and she immediately said, "I hate being a homeowner. I have no weekends to myself. I'm a slave to the house and keeping it up." And I said, "So why do you own the home?" So she responded, of course, with the conventional wisdom, because everyone says renting is throwing away money. And I said, "You're not everybody. And if homeownership is making you unhappy, you can change that." Well, within a week, the house was listed, it promptly sold, she invested the equity for her retirement, and she rents a luxury apartment in a building with a lot of amenities. Her weekends are her own, and she loves reporting what she's done with them to me, and she's got money to spare. So happy ending.
That's a great story. I love busting myths, and the personalization is so important. So thank you all for sharing that. I think we have great insights into how we all ended up talking about this today. So I'm going to ask you a question based on the Women's Center white paper titled "The Future Client is Female." In that paper, we showed that women are more educated, earning more, living longer. So with that knowledge, how do you approach conversations with women clients, and have they changed over the years based on these trends? Andrew, I'm going to ask you to lead it off.
Yeah, I think they've absolutely changed. And when I have conversations, because for most of my career, I was working with men and women with no specific focus. And the amount of coaching and the amount of transparency that comes from the women that we work with is just strikingly different than for me, the men that we work with. And for me, there's an example of a client that I work with still to this day. I was originally introduced to the husband by a very close friend of his who was a client of mine. And he promptly said, "Thank you, you're great. Dan says great things about you, but we don't need any help. We're fine." And unbeknownst to me, another referral about a week and a half later was his wife. And her answer was, "I'm so glad Ashley introduced us. We really need help. We don't know X, Y, and Z. We could really use some guidance." And so to get them both in the same room, to have both of those answers come from the same household and the same checkbook was flooring to me. And I didn't realize until our second meeting that they were actually the same person, because they didn't share a last name. And so, yes, the future client is female. And even if the future are dual income couples, the way we relate, the way we speak, the way we plan, and I think the attention and permission that we give to the female spouse is paramount, because they are controlling the relationship, in my opinion.
Thank you, Andrew. Corey, I think you had something that you wanted to add to that as well.
Yeah, what I've seen in over a decade in this industry is that most people tend to defer to the man in the relationship. So a lot of the times in the meetings, only the man would come in, or if both people in the relationship would come in, the advisor would speak, particularly to the man. And that never sat well with me for, very, very many reasons. And that's one of the focuses that I have in my practice. I always require, both people to be in the meeting, and I, give equal attention to both of the participants and want to give them both the, same amount of time with the floor is speaking and emails, any kind of interaction. I want equal participation.
Great. And I'm sure your clients appreciate that. We know that women are delaying marriage and having kids. How do you approach the career and family planning discussion in light of that knowledge? Sherry, you are going to take the lead on this one.
Sure. There's still blocking and tackling to be done when you start a financial plan straight out of school. Your emergency fund, working on your student loan debt and putting a plan together, getting your first insurances in place. these are all things that if you're not immediately getting married and doing the house shopping, et cetera, you have time and the ability to do. So in some ways, it makes it a healthier situation to embark upon later childbirth, later partnering. However, I frequently have clients who come to me and say, I want to retire at 55. How do I do that? And I say, well, if you have your second child at 39, you do realize you're going to have a 16-year-old at 55. Are you sure you want to pay for college out of retirement savings? Wouldn't it be a little easier if you did it out of cash flow? So there's some very simple math, usually delivered with a smile, little joke, that says maybe we need to bring the dream in a little bit. If you want to achieve it, I'm here for you. I'll do the math that says this is how you do it, but let's take an easier road rather than making it hard for yourself. And I find that shows listening. That's a little bit relationship building and helps to put the basics of time horizon in place, because the key to all wealth management, wealth accumulation is time horizon, right?
Absolutely. So Sherry talked about time horizon, but if we know we're talking about family planning, that's on the client's radar. How do you approach employer benefits? I think, Andrea, you had an approach here.
Absolutely. And to piggyback on what Sherry said, when we're doing great planning, we're giving the client options. And so we know that things change very fast, right? Life comes at you fast. And so we want to make sure that we have funds available to make those pivots as life comes our way. And one of the ways that we do it around the family planning space is around the HSA. So we want to, especially if the employer is matching those dollars, we were talking about, tax deductible contributions, tax-free growth, being able to use those for the, increasing cost of having a child, or down the road, if you don't decide to have children, or in that case, right, late in healthcare, we're going to use those dollars, and we can also use it as a supplemental retirement account. So educating clients on the different options that come with that one account and the tax implications of that, we're really working hard to max out those dollars each year early, because when we get later into our 30s, if that's when we're having children, or 40s, 50s, medical wise, we're going to be really glad that we did.
Corey, I think you had something to add to that as well.
Yeah, just in addition to that, one of the, I guess, most powerful things you can do with employer benefits is really take a look at your health insurance benefits. A lot of people just opt into the plan and don't really dig into the numbers. And, nowadays employers usually have 2 or 3 options that you can choose from. And so you can never plan for the unknown. You can't plan for a broken arm or, something that comes up like that. But if you do know that you're planning on having a family within the next year, look at those costs and see which one or which plan is going to be better for having a pregnancy. And, those dollars really, really add up when you have those kind of life planning events. So just take a close look and do the math, because it really, really will benefit you.
That's a nice service. I can imagine that a lot of people take you up on that. We talked about the fact that women are getting married later, perhaps delaying having children. So presumably they were taking care of their financial picture, their financial situation while they were single and on their own. But once they get into a relationship or get married or have a life event like having a child, have you seen them abdicate responsibility for their financial situation? And then how do you transition that primary relationship from them to the other person in the relationship and keep the relationship in those cases? Corey?
Yeah, it's been really interesting. There's been a lot of studies that have gone over the years, and the latest one that I just read a while back was on millennial women. And so you'd think that millennial women would, be more empowered with their finances and wanting to take more control, but it was showing that even women in their 20s and 30s, as soon as they're in a partnership, they do abdicate the role over to their partner, their spouse. And I just had an example like this a few weeks ago. A young woman reached out to me to open up a Roth IRA. We had an appointment set. She was really excited, and then she emailed me the day before that she had gotten engaged over the weekend, and her fiance has been working with a financial advisor for many years, and so she was just like, they're going to combine their finances and give it all over to them. So it's those moments that it's still happening, and how to maintain it. I always try to empower the women and say, you have a much longer time horizon, both for retirement and living. So let's be empowered and let's make those decisions so you're in control of your finances. And as a partnership, I think everybody should understand we're where the money is going and have an equal play in the partnership, but also don't abdicate it to your spouse, because you never know what the future holds and you never know what's going to happen.
So true, Corey. And I think Sherry has a similar thought process along the longevity line there for women.
Yes, so we agree with that. And the word abdicate is exactly the word. It pains me sometimes when I have work with young women and they get engaged and they decide that that's a gender role that they're not going to buck, which is ironic, because frequently household budgets, et cetera, the actual financial management is traditionally done by women, but they want to defer decisions to their new partner. However, that script flips when women become older. And sometimes I jokingly call it my Olympia Dukakis moonstruck impression. And I say, you know, she says when her husband who's cheating on her goes up the stairs, "Cosmo, you're gonna die just like everyone else." I say this to the men. I say, look, statistically, you know, the actuaries say you're going to die first. My job is to make sure your significant other has someone she trusts to speak to. And of course, all of the papers, and I think you've got another white paper coming up, will tell you that the transfer of wealth away from the financial manager of the husband within months of their demise is staggering, because women do not have these relationships. So I make sure to point out right up front, it's fine if you want to run the show, I'm here for you, but I want to have a relationship with your wife. And she's going to need me at some point in the future. I'm really upfront about that.
It's a very pragmatic approach. The research also shows that women are more likely to be disabled over their male counterparts. And so how do you approach understanding the importance of disability insurance with career planning and family planning? And Sherry, I think you were going to speak to that as well.
Absolutely. All day and twice on Sunday do I want to talk about that. Mostly because whether it's a second act or having a child and leaving the workforce or using every bit of a disability benefit, women need policies they need to have their own disability income policies prior to leaving the workforce, because they're very difficult to get if you're not working. I happen to have a few good tools, such as a non-working spouse policy that is a companion policy to a working spouse's disability policy, because people don't realize, you know, it takes only one toddler on the hip to throw a back out, and then you have a $40,000 childcare bill that needs to be covered. So there's a lot that goes into that. It can take 2 years for someone who changes employments to qualify for their own disability, 2 years of tax returns when you're starting your own business. And women do have a greater incidence of disability. Something like 25% of all people will have 2 years of disability prior to the age of 65. That's a staggering number. So something brand new, probably even after our rehearsal of this, is that I started seeing changes in employer benefits, and that I'm starting to see long-term disability benefit from the employer to be offered for 2 years maximum. And I just reviewed somebody's new job benefits. And usually those benefits go to 65, 67, whatever age engages with Social Security. But now they're offering only 2 years of long-term disability benefits. And that's big. That's a big change.
Someone just asked in the QA function, Sherry, how do you get disability for a non-working spouse?
So not everybody offers it. It happens that Northwestern Mutual does offer a non-working spouse disability, and it's a companion policy for a working spouse disability. So it is something that you can add to it.
Okay, great. Thanks for answering that. So now we're going to switch gears a little bit and talk about some novel planning elements, Andrew, that you've employed with some of your female clients to help them know their value, right down to salary negotiations, which I think is so cool.
Yeah, it's extremely important. When you run the numbers of future earning potential and what happens with a bad starting salary in corporate America today, and with the myth or over reliance on loyalty from the employee side, it can be extremely expensive to take a low starting salary. Your bonus, any equity that is tied to it is usually tied to that base salary. Obviously, your 401k is usually tied to that salary. And when we're in a lot of these internal negotiations, or if someone's being promoted to another job inside of the same company, there is a written rule, actually a written rule, not unwritten rule, that they can't have more than 8%, 10%, 20% salary increases from their last role. And so, which is diabolical, to be honest, right? It actually says that if the employer has been underpaying you previously, that they get the right to continue to underpay you going forward at a certain clip. And so we spend tons of time there. And we have to know what our value is in the marketplace. And that comes from looking. That comes from checking what your tenure and your specific skill set, your education level should demand in the marketplace, and how close are you to that number. And it also comes with psychologically and emotionally preparing someone that they may have to leave, right? That is very hard to, if you like your coworkers and you like what you do, it can be very hard to even consider taking another interview or looking outside. But when we put the numbers together to show what the difference between 85 and 105 looks like long-term, from their retirement accounts to their bonuses to their cash flow, we can usually say, doesn't it make sense to see what the competition is thinking about? And so on top of that, once we start fielding offers, we have gotten a lot of business from clients in their 30s and 40s, movers and shakers, who say, I have no idea how to evaluate or compare one offer to my current job. There's so many different moving parts. The disability might be 2 years instead of 65, right? The bonus, the equity, how do I even, especially with a high tech, high growth company, how do I even quantify the stock options or the RSUs that they're putting into there? And so giving them those background thinking and talking points to just think through what is an applicable offer, and then giving them throughout the negotiation talking points. We had a conversation earlier today, and the client has $146,000 of unvested RSUs. And the new job is a new location. It's a great opportunity. It's a new skill set. They're very excited to explore or take this role. But we need to have that frank conversation with the new employer to say, we're losing $150,000 that we've previously earned. And can you make it up in bonus? Can we make it up in new equity? Can we make it up in an upfront signing bonus? Because without that, this is a really tough financial decision to make for my family. And so giving them those tools, they feel extremely empowered walking in to have those conversations. And when they take the role, they feel really excited to take the new role, knowing that there is a firm or a company that really values what they do.
All great points. And Corey, I think you do some role-playing conversations with your clients as well, right?
Yeah, I do. You know, what I've noticed is there's a huge gender disparity in asking for raises and being really comfortable with that question. I think, you know, I've never had a client that has said, I love asking for a raise, or it makes me feel really, really comfortable. This is so great. Usually I get like, it makes me want to throw up. I want to hide under my desk. I want to run away, and I don't want to do it, even though it's so empowering when you do it and so necessary. So once we, you know, figure out those numbers and what they should be negotiating for and what that is, then we do role play. I encourage them to do, you know, role play with other people in their lives too, just to get really, really comfortable with asking those questions, you know, proving why they deserve this raise, and getting like really, really comfortable before they go into HR and before they're in that position.
So before we go to Sherry, I want to, Sherry has a really great name for her approach, the Freedom Fund, that is just so perfect. But someone on the chat asked, how do you get paid for? Do you charge for that service? So sure, I'm going to let you answer and talk about your Freedom Fund. And then if any of you want to talk about if you in fact charge for that service of coaching role playing when Sherry's done.
Sure thing. So the Freedom Fund is the polite name for the fund, but the implication is that planning is yours, mine, ours, and mine. There's a fourth fund, that is a little piece set aside that is an escape fund. And that escape fund, I can think of three options. One is, sadly but true, maybe escape from the relationship, have a little bit of a kitty. The second is how to leave a job before you have your next one lined up. So a nice segue from Andrew and Corey. When you realize that you need to head for the door, sometimes you want to disengage prior to going to the next place. And so that extra fund is there and you give yourself permission to spend it, which is not the way all savings buckets work. And certainly family buckets, you don't want to take from the family bucket for what's a discretionary activity. And the third agenda is funding your second act. And as someone for whom this is a second act, I took a big bucket of money and I said, all right, this is going to be my payroll and my this and my that as I built my practice. So the Freedom Fund is whatever is going to get you to the next thing. And I encourage you to plan with one.
All right, so does anyone want to comment on if or how they charge for those coaching sessions?
Yeah. Yes, I can. I want to jump right on top of what Sherry said before we go. Like, that is extremely important. I think our jobs as planners are to do what's in the best interest of the client. And a lot of times, intuitively, it can look like not the best financial decision on the spreadsheet. But I am huge, and specifically with women, and encouraging them not to stay in toxic situations. And it can be very tough to leave when the finances aren't set aside. And I'm always shocked at how my opinion is the one that allows them to take the leap. Because for some reason, I'm the last person that they expect to recommend that they leave something that on paper doesn't look like the best financial decision, but they're miserable. And so, Sherry, I think the Freedom Fund's perfect. Whatever we call it, that fund is perfect. But I'm a fee-only advisor. So the compensation, coaching, employee negotiation piece is a part of what we do. In a lot of our annual service calendar, we have a choose your own adventure meeting. And that meeting, depending on the client, can be about equity options, real estate, maximizing employee benefits. And we talk about the things that we can do. And we're encouraging them throughout. If you need to jump on a 30-minute call and think through this, like, we are here for you. That is what we're here for, is that coaching. So it's built into our package as an option that they can take advantage of, and a lot of people do.
All right, great. Thanks for that. Now we're going to move on to divorce. So with more than half of all marriages ending in divorce, how do you spend your time with your clients leading those conversations? Andrew?
Yes, I think I said earlier, about 50% of the job preparing people to get in and out of relationships. It is a big piece of what we do, whether it's planning for a wedding, or at least even if there is a single person planning to start a family, like we said before, coaching them on what this would look like if the hopeful new spouse has an advisor. How do those relationships work? And is there room? What does it look like to interview both to choose an advisor? What are the things we should be looking for? And so all of those things are very important when we talk about getting into a relationship. And we do a lot around mindset and values. And so having that conversation and planting the seed that the way you view money and the way your potential spouse views money are probably going to be totally different. And the values that you inhibit and that you live through your dollars and the way they do it are also different. So anytime we're combining finances, we need to have that conversation, a specific meeting to have the conversation of how do we mesh and compromise different mindsets and different values into one. And I'll let some others talk about the divorce side, because the divorce side is also extremely robust. And usually, I'm specifically not preparing them in marriage for a divorce. But specifically in 2020, since COVID started, I've received about 9 calls to say, unfortunately, we're splitting. What do we do now? So in the last 12 months, I've gotten pretty well versed on how to untangle finances with couples, unfortunately.
Sherry, you shared with us in your intro how you are so open about your experiences, and I think you have a point of view on this as well.
Sure do. And I will tell you that it is good to be my ex-husband, just for the record. So it's 10 years in my rearview mirror, which leaves me with, tales to tell and learnings, but perhaps not the deep wounds. I think the biggest gift that I can offer my clients is empathy and my time. By the way, I operate fee-based. I have the option of operating fee only. I have the option of operating implementation-based. So depending upon the client and their needs, I will determine the appropriate manner, which speaks to the fact that I offer up a tremendous amount of time to my clients, especially if they are going through upheaval. I am frequently the person who checks the spreadsheet. I am frequently the person who might work to provide input to a mediator. One of the things that I joke about is that attorneys do not do math. Attorneys do separation agreements. So I'm always reminding people, per my early story, maybe the house isn't the thing to fight for. Maybe it's a piece of the pension. Let's calculate the net present value of that pension. I mean, of course, it's different for everybody. But the thing that I'm offering, and like Andrew, I'm going through it right now, a client who is in mid-divorce and mid-mediation, and she's kind of on heavy rotation. Hey, do you have 15 minutes? Can you squeeze me in? Can you squeeze me in? Can you squeeze me in? And the answer is always yes. To protect myself, it's yes, and here is when I'm free. But the answer is yes for my clients, to offer up a piece of myself, the inner self to them.
Corey, are there any differences for a non-traditional client? Non-traditional marriage clients?
I was just going to touch on, the same thing, almost what Sherry is saying, is empathy is, it's really important. And I don't think there's a difference between, same-sex and hetero couples divorcing, but it's really important to have a support system and get that support system in place for them. A lot of people, I've been through a divorce too, like Sherry, so I can look in the rearview mirror and say, wow, there's a lot of things that are happening then. It's a very emotional time. So what I try to counsel, my clients is that first year, we're not making any huge financial decisions. There's too much going on and you're not in your right mind. So we're not going to be making any huge financial decisions, but I am your financial partner through this, and we'll work through this. And I'll help them look at the mediation reviews, or what's being proposed in the divorce settlements, and making sure they have a therapist and other support systems to help them get through this time. And then after 6 to 12 months, when they start getting a little more grounded, then we start making those big financial decisions that need to be made, like should they sell the house, or what's going to happen. But both with same-sex and hetero, they're pretty much the same decisions and same process that we go through. And and I was going to say, and for the fee question too, like the other two, I am a flat fee annual base, and I also do hourly planning. So people just want to only talk about, employee benefits, and that's the only thing they want help with. And I just do hourly retainer with clients as well.
All right. Well, thank you for answering that question from our audience. So we've had some really great discussion, and now I think we're going to focus a little bit on insurance. In the college's recent release of the Retirement Income Literacy Survey, we see that only 6 in 10 women own life insurance versus 7 in 10 men. Do you see this as the case with your prospective clients? And when they approach you, Sherry, how do you have those conversations around life insurance with your clients?
So the answer is yes, I see that. I see that women tend to be underinsured, which is amazing because we nurture, we give, we will do anything for our child. Sometimes we should turn off the spigot and we don't. And yet we don't recognize life insurance as the gift. Philosophically, I believe that there's a purpose and a time for life insurance throughout your entire life. I am not a term versus perm person. I'm a term and perm person. So the goal of protecting insurability is to have someone insured cheaply and for a great deal of death benefit when they're young and they're growing a family and they know that they would have to support raising a child without them, et cetera. There's a lot that goes into that. But that usually somewhere around the age of 40, before, if they can afford it, convert a hunk of that to permanent insurance these days with an accelerated care benefit. Because the one thing about women is that they use every single dollar of long-term care benefit if it's available to them, similar to the disability benefit. And so this is a way to create a Swiss Army knife, kill two birds with one stone, so to speak. So I think there's a role for all kinds of insurance, even in retirement, whether you use the whole life cash value argument or the long-term care, or for goodness sakes, taxes, convert taxes.
Well, I know that Corey has a slightly different approach to this. So why don't you talk about where you draw the line with insurance, Corey?
Yeah, I see, I'm a big proponent of term insurance only. It's very, very cheap. The younger you are when you get it, the cheaper it is. So the quicker and earlier you can get it in place, the more benefits you're able to get, and at a lower cost as well. And I believe, life insurance, you're insuring against the worst case scenario, right? You're insuring against you or your spouse dying. And when that really, really matters is during your working years. For the other policies, if you're thinking about retirement, then you need to be saving for retirement and retirement vehicles. The insurance policies tend to be really, really expensive, and a lot more fees are involved than just saving for retirement and saving for term, and also looking into a long-term care policy. So I believe in insuring for the risk that you're insuring for. And when you hit retirement, you're not earning a salary anymore, and you should be living on your retirement assets, not relying on a life insurance product.
Well, it's good to have two different views there. For our audience. Anecdotally, the industry might see the income producing spouse has far greater coverage than the stay-at-home parent. And I think we've talked about that. What are the risks that can occur if by having an underinsured stay-at-home parent? Corey, would you take the lead on that?
Yeah, I see this a lot of the time where the stay-at-home spouse is very underinsured or not insured at all. And, when you think about, okay, so you have one spouse working and your other spouse taking care of the kids and taking care of the home. Well, if that person that's at home dies, then you're going to have to replace a childcare. You're going to have to replace a cook. You're going to have to replace a house cleaner. You're also most likely not going to be able to go back to work within a few weeks. You might have to take 6 to 12 months off to help the kids readjust and help yourself readjust. So it's really important to do an analysis to determine how much life insurance should be on the non-working spouse, just as much as on the working spouse.
Andrew, how do you handle those conversations or calculations?
Yes, I think 9 times out of 10, the non-working spouse is completely underinsured. I do think I have some privilege as a male to look men in the eyes and just challenge their assumptions. And the value of the stay-at-home, and Corey nailed it, the value, how we calculate that value, what life will actually look like. And for most people, they haven't seen it, right? So they really haven't seen primary breadwinner, stay-at-home spouse pass away at age 35 and 40 and what that looks like. But the movies, I see it all the time in the movies where the truck pulls up and they move out of the house and everything kind of falls apart. So we're having those conversations of what, a month afterwards, what do you think your days will look like with 2 or 3 children and no stay-at-home spouse? And how do we fund that? What does it look like emotionally? And you probably, like Corey said, you probably need to take some time off. So I really step into that. I enjoy it. And it's also, for the non-working spouse, who's not always the female. In some cases, recently, they're male non-working spouses. But either way, I think they light up just being valued on paper just as much as they know they're valued in real life.
That's great. That's important. We've learned that women tend to think about finances holistically. So we talked about women usually, majority of the time, manage the financial relationships. Because we manage the household expenses, we think about risk and healthcare. So given all of that, are your conversations more big picture with women? Do they track to what we saw in our research? Sherry, I think that you have had some conversations about women thinking that maybe they should know more.
Dentists, lawyers, anesthetists, doctors, these are people who come to me with extraordinary educations. And oh, by the way, they come to me with $250,000 to $300,000 of debt to fund these extraordinary education. These are smart women and they are professionals. And they very sheepishly say, I should know this, but I don't. I know everything about biochemistry, but I don't know this. And the answer is, it's okay. Nobody ever taught you. So my approach with them is saying, look, you have to tell me how much you want to learn and how much you want to outsource, because I'll teach you anything you want to know. You have proven that you can assimilate huge bodies of knowledge like that mere mortals cannot assimilate. So if you really want to learn this, I'll teach you, or we can travel that path, and then you can say, no, ready to outsource, I get it. And that's that. And that's kind of the way the relationship works with them. But they don't know this. It is amazing, that gap.
Corey, how do you work with your clients to re-educate them?
Yeah, and I have a very similar experience to Sherry, where I get emails all the time with, new clients booking meetings with me saying, oh, I feel so stupid, I should know this, or I'm really ashamed that I don't know this, and just really cutting themselves down. And I've never had a male client come to me and say such a thing. So there is just a lot of shame that is attached with, numbers and finances for women. So I really like to do what I call, life planning. And there's a lot of tools and books that I, use with my clients to kind of get to their money stories and understand, are these stories coming from childhood, or where did you learn this, or were you in a relationship where somebody, was controlling all the money, and try to really understand, what those issues are, and then being their partner to work through it all and really empowering them with their finances. And like Sherry too, some people come to me and they don't really want to do a deep dive. They don't want to know a lot. They just want to know, what you're doing, on a high level. And so I meet them where they're at. If that's what they want, that's what we're going to do. But I really am happy to do a deeper dive into really educate women with their finances and what's going on with all the number stuff too.
That's so important. So now let's talk about value-based and goal-based investing. So with the changing landscape, we hear a lot about value-based and goal-based investing. Who brings up the conversation? How do you bring it up? I think you have a unique approach at your firm, Andrew.
Yes. And thank you, Corey, for saying what you're saying. What's really important is, where did you learn the behavior? And really having a conversation, was it mom and dad? Was it media? Like, what are those scripts? And we talk about scripts a lot. I think one of the questions they asked, what are some of the tools we use? There's a PhD, CFP guy, I think his last name is Klotz, Klotz, and he has a money scripts assessment, and they do a lot around money scripts. And it talks about the scripts being, what is your attitude or mental mindset towards certain scenarios? And so we do a money scripts scenario about mindset. We also do a value assessment in our planning process. And from that conversation, we really learn if people are altruistic, if they're philanthropic. We learn, if there are social justice causes that are important to them, or how they view themselves in the world, because we need to know those things to give them a plan that's tailored for them. And part of the plan that's tailored for them is, if those values are prevalent in those assessments and those conversations, we want them to be prevalent in their investment portfolios. And so we're typically educating them on, here's how we invest our values. I've had, maybe 1 out of 10 or less come to me and ask me to, match their values with an investment portfolio. But more than anything, we're showing them their values back to them in an investment solution, an investment portfolio, and it means a ton to them. I think they're more likely to continue saving, and not only in saving and investing in those portfolios, but telling their friends and being proud of knowing where they're invested, and that it reflects what they really believe. And so we use those tools for the plan, but we also implement those into the investment solutions with, ESG funds and SRI funds as well.
Are those homegrown tools, Andrew, or are those something that you found like off the shelf somewhere, the assessment tools?
Yeah, we found them and tweaked them off the shelf to identify those values. So I can share what we use because there are assessments that are free to use online that we send links to as homework going into our second meeting, and then discuss going through how they made you feel, what did you learn, how was money growing up, and questions like that.
All right, so our time is flying by. I wanted to talk a little bit about longevity risk, and let's just start with the extended care plan. So what do you classify as an extended care plan, Sherry? I know you have some strong feelings about not being a burden to your children.
People immediately go to the insurance, the cost of the product conversation, and that's not what a care plan is. A care plan is just that. It's the plan. It's, what do you intend to stay in your house? Do you intend to immediately sell the house and go to a continuous care, facility, one that graduates, et cetera? Do you intend to immediately, as soon as the kids are out, are you going to sell the house and go to an over 55 playground community? So talking with people and understanding two things. One is, what was their experience with their parents and their grandparents, and where are their values taking them? And the second is, there's a wealth of communities available, including special purpose over 55 communities. There's an artists community in Burbank. There are all kinds of things that are popping up, coupled with the use of what's called community Medicaid. We're starting to see a lot. So as an alternative to long-term care, Medicaid providers in the community being delivered at home. So you're no longer relegated to, pretty horrific, in some places, Medicaid facilities. We all have baggage built up about this. So my emphasis, real quick, is just it's on frailty risk, not long-term care risk, frailty risk. If you go into retirement healthy, if you have invested in your health, because that's the #1 investment, if you have invested in your health, the flip side is you're going to live long enough to become frail. What do you want your experience to be? Then we'll figure out what tools are the right tools to fund it. You never know. Could be just a no-step shower, because I love remodeling.
All right, let's talk a little bit about the children and the heirs. Assuming that we live long enough, how do you create lasting relationships with those children and heirs? Andrew, what have you implemented at your firm?
Yeah, that's a great question. We are lucky enough to be typically younger than our pre-retirement, retirement folks. And in most of the cases, they're asking for us because we're young enough. Or if we're approaching them, we're talking about a 25 to 30 year run that they have into retirement, and that we're still going to be around to implement that plan and transfer those dollars to the next generation. Because our plan is a 25, 30, 40 year plan. In that conversation, we involve the children in those conversations. So when we have the estate conversation, which is an annual update of beneficiaries and design, and having that conversation around what do we want to happen, bringing in other professionals if we need, or we're designing or redoing an actual estate plan documentation wise. But we talk about having the beneficiaries present. We talk about them knowing what the plan is and what it looks like. And so starting that relationship, typically they're also saying, hey, we really want them to work with you as well. How can we figure that out? And we're working on that piece to do multi-generational planning for those folks. The firm's not large enough yet to really have, designated folks for the heirs. But I think in having that conversation, if we are going to work for our entire lives to save and build and give our family, our descendants a real leg up, then it is just as important to make sure that that plan is meticulously documented, and that the players in that plan know what their role is before, Friday Night Lights come on and they're supposed to follow a playbook that they've never seen.
Thank you, Andrew. Sherry, you have an approach for dealing with children and heirs as well, don't you?
Absolutely. So Andrew said playbook. We have sample mission statements, and we ask families to create a mission statement that articulates their values. Sometimes that's the first time children and grandchildren get to hear what is most important to their parents and their grandkids. And it's a lovely ritual to participate in. And it tends to align them on the same page. And then once we establish this, then it almost dictates to us the tool that's going to get us to the outcome we want, the estate planning tool, as well as the methods for financing. So I'm all for sample mission statements.
And Corey, why don't you round out the discussion as well?
Yeah, very, very similar to the other two. So I love having these conversations, with clients and saying, like, what are your goals and what are your dreams? And let's get that down on paper. And once we have that vision down and, we know what you want, let's bring in the kids. Let's, share that with them. Can we have a dinner and talk about this? Or can we, have a big fun family event and make it really fun and special? Because the kids really do want to know, and they do really want to be involved in the process. And they also do really want to honor their parents, dreams, hopes, and wishes too. So making it a family, like fun time and family project is really what I found to be very powerful.
So just level set real quick here. So a fun family project talking about longevity and inheriting wealth, and like, how is that? I'm inserting my family. I'm inserting my family around the table.
Right. Well, it's talking about, are there any philanthropies that are very special to their parents? What does that look like to support them? Or do they want, the funds to help with their grandchildren going to college? And if so, what does that look like to them? Or, if they're donating, a big portion of their estate, letting their kids know in advance, why that's so important to them. So there's not a big surprise when there is, a death in the family, and hopefully, that helps stop any litigation or any, negativity happening at that time too. So it's more being very proactive with what the dreams or goals are, and then getting everybody knowledgeable on that too. So everybody feels supportive for what the plan is and knows what's going on.
That helped clarify. Thank you.
Yeah.
So we don't have much time left, but there were a couple questions in the chat that I wanted to throw out to the group. Somebody was asking, so historically, the age difference in a heterosexual client relationship marriage was somewhere between 7 and 10 years for the male. Does that still hold true, or has that shifted over the years? Have you seen?
It has shifted favorably. I have a lot of women who are partnered with younger women or men, and the man a couple of years younger tends to work out actuarially. My hope is that they go holding hands at 99.
That's a great picture. Somebody else asked, Sherry, if you could just repeat your quote about disability, was that 25% of women would be disabled for about
women. So 25% of everybody under the age of 65 spends 2 years disabled in a career. And that's just a crazy.
Yeah, that's a huge number. And then somebody asked if women are employed in financial services, like some of us on this call are they more likely to abdicate responsibility or take on responsibility? Is there any change for women in financial services and their behaviors?
You want to start, Corey? Because I walk my talk, right?
Yeah.
Right down to the mason jars with my soups and my lunch. I absolutely walk my talk, and I'm very candid with my clients about my financial plan.
Yeah, I'm an open book. And so I operate under the idiom, what would I do if it was my mom's money or my money? And that's what I tell all of my clients. So anything I would tell my clients, I'm doing the exact same thing. My investment portfolios are invested the exact same as all of my clients. If I am saying I recommend you get XYZ in term insurance, it's what I would tell my mom, or, what I have for myself. So I definitely, walk the talk, and anything that I do for myself, I would, recommend with the clients, and it goes both ways.
Well, I want to thank you all for a very lively discussion today, talking about the challenges facing modern women in financial planning. The time flew by so fast. Yeah. And I'd really just like to thank all of our participants. A special thank you to our wonderful panelists for being so authentic and so open and sharing all of your insights relative to your practice and overcoming the challenges for women. Thank you on behalf of the American College.
Thank you, Hilary.
Thank you.
Thank you.